pulled pork. Santos, pretty sure you've done
Santos.
that before, Tony.
I have, but it's about 2 or 3 years ago I looked it up.
Weren't there some problems with Santos back then? I seem to remember it
Um,
had a taint. There was a Santos taint.
there was, and I'm going to say perhaps it was with the merger with Oil Search, one of the other ASX company
That
that was
sounds
a big,
familiar.
big oil company based in PNG, which I think has worked out. Anyway, um,
Right.
it's back on the buy list, as is natural gas as a commodity. Um, in now a 3-point trendline buy, but oil isn't. But Santos, even though it's an oil and gas company, is probably 80 or 90% gas and 10 to 20% oil. So it's mainly LNG which drives the performance of Santos. It's the second biggest oil and gas provider on the ASX, Woodside being the biggest. um, what else can I say about it? They're an international company based in South Australia. They have facilities in Western Australia, Papua New Guinea, Timor-Leste, and Alaska. They've got gas fields in the Cooper Basin in South Australia, big liquefied natural gas facility in Gladstone, where they send the LNG overseas to Southeast Asia. A lot goes to Japan. And they're also proceeding with a proposed domestic gas project in Narrabri in New South Wales. So international company, quite large. Interesting history with the company. So Australian based. Back in 1949, two school friends from Adelaide, Bob Bristow and John Bonnython, thought that oil could be found in South Australia, and they confirmed that in the following years. And in 1954, Santos was incorporated. And I didn't notice until I saw this article. Santos is an acronym of South Australia Northern Territory Oil Search. Did not know that. And one of the people responsible for naming Santos that way was Sir Douglas Mawson, who joined the inaugural Santos board. And he was part of the decision to add Northern Territory to the Santos name. So otherwise it would have been Santos. They listed in October 1954 on the South Australian share market, back when the states had their own boards, as they were called. And because they listed in 54, it means they turned 70 last year as a listed company. In 63, they saw their first significant gas discovery in the Cooper Basin in South Australia. And in 66, they also discovered gas in the Moomba gas field, which was in the Cooper Basin, but a large-scale discovery. It gave them the confidence to put a pipeline in from the Cooper Basin to Adelaide. And in 1969, natural gas was piped from Moomba and arrived in the Adelaide suburb of Blair Athol in South Australia. So the first pipeline to a city of natural gas occurred. In 1970, gas and crude oil was discovered in what was called Tirrawarra 1. Until then, the opinion was that the Cooper Basin would be only a gas resource. However, it was the first time that oil had flowed to the surface from a well in South Australia. In 1982, Santos put a pipeline from Moomba to Stony Point near Whyalla in South Australia, and that allowed Santos to start exporting oil and gas, both overseas and around to Geelong for refining. And that port was called Port Bonnython in honour of the founder of Santos, John Bonnython. In 84, they sent their first load of LPG via the vessel called Genkai Maru to Japan. In 2002, they discovered gas in fields in offshore WA in the Northwest Shelf. In 2006, they discovered fields in Timor-Leste, also in offshore Victoria and offshore in East Java. And all those fields, started production in 2006. They were discovered earlier. In 2008, Santos signed a gas agreement with the PNG government. In 2015, the Gladstone LNG plant went online, and that saw the first shipment of LNG leaving Curtis Island near Gladstone and delivered to South Korea. and that was partly supplied with Santos's Cooper Basin gas. So the Gladstone port really opened up the export channel for LNG in Australia, particularly for the Cooper Basin. 2021, Santos completed a merger with Oil Search, combining two industry leaders and enhancing the company's growth portfolio and PNG operating business. Also through the merger, Santos gained its first North American project, one called Picker, in Alaska, where it now has 3 projects drilling and exploring for gas and oil in Alaska. In 2024, Santos announces the successful startup of the Moomba CCS, which is the carbon capture and storage project, and they commissioned the first CCS project to to put CO2 depleted gas back into the Cooper Basin. So I guess it's a watch this space to see how that rolls out. So that's the history of Santos. Latest results. Wasn't a great year for Santos. All metrics were down compared to the prior year. Production volume was down 5%. Revenue was down 9%. Prices for both gas and oil were down 3%. Earnings per share down 11%. However, analysts are forecasting growth of 12% for this year, and that's guided by Santos's management. But I do put an asterisk beside that because it's highly dependent on operational execution across a large complex business and also the movement in commodity prices, which is difficult to forecast as well. But looking at the QAV numbers, it's definitely a value buy. ADT for this company is $55 million, so it's available to buy for anyone who's listening. Stock price is $6.75. The buy price is only $6.73, so it's just nudged above its buy recently. And it's also close to its sell price of $6.58. So some people might want to wait for a bit for the trend to resolve a little bit more before they buy, but it's hovering above its buy line and a little bit higher above its sell line. It's below consensus target by 15%, but above IV1, which is $2.85, and intrinsic value 2, which is $2.89. Net equity per share is interesting. It's $7.69, so we can buy this company for less than book value, which makes it a value buy. Yield is 5.3%, which is strong, but we don't score it for that because it's not quite over our threshold. Stock Doctor rates Santos as a star growth stock, and also, of course, that means its financial health is strong, and it also has a steady financial health trend. Stockopedia aren't as kind. Santos ranks as 69 for quality out of 100 and only a 4 out of 9 on the F score. It does rank higher, 80 for value, and only 85 overall, so not quite up there on Stockopedia. I'll call out return on equity for the company as only being 7.6%. I know some listeners focus on that. It's not part of our checklist, but that is a fairly low score for ROE. PE is 12 times, but it's not the highest or the lowest in the last 3 years, so it gets a score of 0 for us on that one. PropCAF is 4.78 times, so that's where we're finding it being supported on our checklist. We're buying it for less than 5 times operating cash flow. Even though forecast EPS growth is 12%, the PE is reasonably high, so forecast growth over PE is only 0.98, so we can't score it for the PE growth ratio. Doesn't have an owner-founder anymore. It's 70 years old as a company. It is a new 3-point trend line upturn, so we score it for that. Equity is also consistently increasing over the last 5 years, so we score it for that. So all in all, 12 out of 17 for quality, or 71%, which is probably fairly similar to what Stockopedia had, but a QAV score of 0.15 boosted by the PropCAF on the company. I want to highlight some risks with Santos. Guy called Kevin Gallagher's been running it for a long time, very experienced operator in the gas field, but he's been there for 10 years and so is likely to have a successor in the short to medium term announced and appointed. And so succession planning and succession execution, I think, is a risk for this company. Whether the next person is well regarded as Kevin remains to be seen. I think carbon capture and storage I have down as both an opportunity and a risk because it's the first plant. There aren't many operations around the world to look at for this, but if it does work, then it actually solves a lot of problems for the fossil fuels industry, and there's an upside for Santos if it does work. I'm highlighting business complexity as a risk, and if you go through the annual report and see everything this company does and the various joint ventures it has, and there's exploration and drilling for new resources and development for that. There's capital intensive nature of doing that. There's keeping all the existing stuff, pipelines maintained and running in 4 large divisions. And then there's commodity hedging or commodity risks to take into account. It's a complex beast. So business complexity, I think you got to call out as a risk for this. 2 other risks, climate change legislation, I think is a risk. So if for whatever reason there are stronger pressures applied to the oil industry and the gas industry around carbon emission, that could affect the profitability of the company. So that's got to be a risk. And that could be pressure applied to the banks that lend it money, for example, which has been happening. So that's an issue. And the last risk I'll highlight is potential sovereign risk, because they are in JVs with the PNG government and they are in JVs with their exploration in Alaska. So it wouldn't surprise me if there ever was a change of government in the US that the next government shuts down drilling for oil and gas in Alaska. It's always been a contentious issue. And it also wouldn't surprise me if the PNG government at some stage turns around and wants to renegotiate the deal.
I like the way you said that. If there is ever another government in the US,
yeah, drill baby drill.
You just like slid through on that,
yeah. Drill baby drill certainly helps them at the moment, but that may change. So that's Santos back on the buy list.
Wow, I'm not even going to look at what price it was when I sold it last time because I don't want to know. Okay, well, let me see. I think that's everything on the list. I did have to sell 2 US stocks today. Zim